you look at this real estate as a pack, it has underperformed in a very large manner, and stocks are available at least quite below it's trading at a all-time low, so as to say. But on real estate pack, I'm still not optimistic, and I would still urge an amount of caution, simply because I think the underlying asset prices have gone far in advance. And if you look at the per unit sales, which are tenement sales, I think that is not keeping pace with the price hike. And all the balance sheets of real estate companies are stretched, leveraged. So I think I think still in real estate there's some pain before we can consider doing bottom fishing. On metals, I think it's a mixed bag. It's a 50-50. Simply because global news is not so optimistic, so there will be some amount of pricing pressure. So if you ask to do bottom fishing, I think between metals and real estate, I would say do bottom fishing in metals rather than real estate. Real estate, I think still there is some pain left.
What's the next big thing, Venkat, as a house you are betting on? Because we've often seen markets, they follow cycles, they follow themes. It was IT in 1999. 2003, to a large extent, it was infrastructure and the machinery space. 2010 and beyond, what is going to be the next big thing?
Actually, the next big thing in India is going to be obviously a play on domestic consumption.
That's the most obvious theme, isn't it?
No, I'll just address that, because see, in many times money can be made by doing simple things. Because if you see the IT boom, I think let's break the IT boom. The IT boom actually started in '97 when the entire story about Y2K happened. And what typically happened, all the early investors in IT, I think they put money when Satyam was 37 rupees or 38 rupees and exited at when Satyam touched 150, and maybe they got short Satyam at 200. But the biggest bang for the buck was made when the actual huge amount of margin expansion happened, when the world discovered the stock, knowing that we had some 8 quarters of continuous 100% earnings growth.
Satyam is the right example.
No, I'm sorry, that's a wrong example. I would say I should replace Satyam with maybe Infosys. Now, going ahead, I think same thing about domestic consumption. There is a big amount of play, huge amount of momentum as India enters into the second, the last, as it goes from a trillion to a next trillion. I think there will be huge opportunity in that space. And second thing is, if you ask me to take a bet, then infrastructure as a pack has underperformed. If you see the Nifty performance or on the sectoral indices, infrastructure has underperformed in the last 1 year. So basically people are getting tired that everybody knows infrastructure very good, but somehow it does not translate into earnings number. I think in the next 2-3 years, infrastructure will again start, the earnings part of it will start catching up with it.
I have a little different view, but it's my personal view. So maybe pharma sector is one sector that one should watch out for, because 2-3 things have happened. One is healthcare reform bill has been passed in the US. Europe is passing through a very severe recession, and the primary cause is a deficit of the governments, and which is on healthcare. So, and all these factors will lead to significant growth for generics exports from India, and most of Indian pharma companies will do well. This coupled with the fact that in last 15-20 years there has not been any blockbuster drug discovery, and most of the large selling drugs will go off patent very soon in the next 2 to 3 years. This is one sector, and you know, this sector is not very sexy because it doesn't give you 100% return, it doesn't give you ups and downs, but 25-30% compounded, as many companies are expected to grow over the next 5 years. Basically, my experience is it beats almost all the portfolios, by a huge margin. And we recently published a report on pharma sector, and the two picks there were Sun Pharma and Dr. Reddy.
What's the biggest challenge for you, Venkat?
As an organization? Actually, if you see our business, then I think we are, it's a cliche, but I'll repeat it. It's a very people-oriented industry.
It is not Paul the Octopus?
So
when he's predicting something, right, imagine all financial firms going to him for predictions.
I think we should wait and see how good Paul the Octopus in the next 10 predictions. So, but apart from that, I think obviously we are a knowledge-driven, people-intensive industry, and I think managing people will be the biggest challenge going forward.
Nirmal, financial industry per se went through a mess in 2008. How are things looking now? Is talent genuinely coming back, and is talent coming at a good price?
Things have improved, and talent, I think, did not leave the industry, so most of it was in the industry and is now easily available, but maybe a few Me Too players have got out of the industry or got consolidated, so talent is easily available, or maybe expansion plans of many companies have been cut back, so the availability of talent is relatively easier. Is not very cheap now, and I doubt whether it will ever be at a cost that you want it to be, so it is expensive, but talent is available in the industry. I think this entire crisis has driven home one point, that this industry is here to stay and here to grow. because many people who panicked and cut back and now trying to again build it up. It takes time and it is always expensive to cut down and then try to, because the industry, when you run a business, is not very flexible like elastic that you just pull it and shrink it back whenever you want. It doesn't happen that way. So now we retain most of our people in the crisis and we are happy with that. And I think the way to go ahead is to build your team and your plans slowly but steadily.
When do you think you would be able to reach your peak profitability, which you reported in 2007, 2008?
No, we already crossed our peak profitability in 2009-10 because the 2009-10 profitability is significantly better than 7-8. So
the market cap has come down.
Market cap has come down significantly.
So what is the fair way to judge financial stocks or brokerage stocks?
It's difficult, but my perception is that you look at the way their customer satisfaction is one, how customers are growing and how their business is well diversified and on what platform. I think the retail business, which is more diversified compared to a business which is driven by very few large high volume traders, is far more steadier to grow. And companies that are based on research, good customer service practices, good compliance, very robust compliance, because going forward, I think regulations will become tighter and tighter and compliance will become one of the key requirements to succeed in financial services industry.
Venkat, let me just draw the broader sketch for the markets for the year 2010. Sensex Nifty on a YTD basis, they've done nothing. But individual stocks, ITC, Infosys, Lupin, they have marched up and they've marched up strongly. Will that be the trend for the second half as well, Venkat, that large cap, major indices may not do anything?
See, if you look at, I agree with you, because I think India is now entering into what is called as on a market speaking a fair valuation. So alpha will be given by stock selection, and I think more and more people have to focus on stock selection, pick individual stocks, and that's how you hope to outperform the market.
You don't expect a runaway rise or outperformance which could come in the Sensex or the Nifty?
It looks unlikely because, and as I explained to you earlier, I think it's not because India is doing exceptionally well, but because of global uncertainty. We already have seen a huge amount of foreign inflows, so now I think the market is poised to take a breather, and maybe next year we'll see if the earnings momentum continues, then I think next year will be a time where we see a runaway bull market.
Venkat, a 30-second answer to this one. Which is one sector or one cluster you will never buy?
I think that's a very difficult thing to answer, because every stock is a buy at a price and a sell at a price. So I think it depends upon valuations rather than to that extent I'm sector agnostic.
Nirmal, minus India Infoline, which is your favorite brokerage stock?
There are quite a few brokerage stocks, but I won't name them live on camera because all of them are friends. So if I tell you a few and miss out others, I mean it might cause unnecessary strain in my relationship. But there are quite a few good brokerage stocks, and the leading top 5-10, all of them are well-managed companies and they are good competitors.
Okay. As partners, what is one thing which keeps you going? Venkat?
I think both of us are focused on growth, and that is a common link, and both of us are growth oriented, and I think focus on growth, and that keeps us going day after day.
But opposites always attract, and I'm sure you have your own set of differences, dissimilarities.
Yeah. And in fact, he's an engineer, I'm a chartered accountant, so our dissimilarities in terms of background start from there. And we have certain dissimilarities. It's not that other than our background and other than where we have worked, maybe Venkat is, he's more perceived as a very nice and gentle human being. So, people, if I'm sometimes harsh, it's easy for them to go back and take
and you like that image of yours?
So we balance each other. If at times I get more aggressive, then he is a cushion to absorb that.
Okay. Gentlemen, good to have you on ET Now.
Thank you so much.
Thank you so very much for joining us. That's it on this edition of Double Bill. Hope you liked the show. Thanks for watching.